Hello and good morning, traders from Chicago. It's 8:01 a.m. Chicago time on Thursday, the 21st of July, 2022. This is episode number 2277. A quick reminder that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, those of you who've been listening to me a while probably notice that I say that disclaimer every single time. Every single time. Just a quick pop quiz. Let me know why that disclaimer is being said. Why do you think you have to hear that every time I'm broadcasting? Just a quick fun pop quiz there. Let's take a look at this morning's Convergent Trading pre-market summary sheet. We have a mixed market this morning, mixed risk exposure or posture. We have the major U.S. markets sideways, except for the Nasdaq. The Nasdaq's up about 60 points. 60 points, and the DAX down 54 points or 0.4%. You may already know. You may already know that the ECB announced this morning. All along, the ECB has been talking up 25 basis point hike, and they did 50. This is really an important fact here from this morning. ECB's way behind the curve, it seems to me. As a result, the dollar's taking a hit. Dollar's down 54 cents, 0.51%, pulling back. And so on. So, the announcement was at 6:45 Central, 7:45 Eastern. The conference is at 7:30. Not sure if the conference is done. Looks like she is still talking. ECB's President Lagarde. We're all entitled to our opinions, folks. But in any case, some of the key players, the key moves here today is Italy's Draghi resigns. A major party has not pushed through for the confidence vote, which he asked. He was going to step down and was urged to request a confidence vote, and a major party didn't come through, so he just threw in the towel and moved away, moved out of the position, throwing that market for a loop a little bit. Nord Stream 1 has got gas flowing again from Russia as promised. And those are the key pieces. Tesla reported yesterday. Tesla had missed its first sequential quarterly profit more than a year. It's saying that the Tesla, what is it called? Truck is coming out this year, sometime later this year. A lot of promises there, but who knows? In terms of what's on deck, what was on deck this morning we had business confidence out of France came in at 106 versus 105, so slightly better. Initial claims in the U.S. came in at 251 versus 245,000, slightly worse. Philly Fed Manufacturing Index, much worse, 12.3 on the negative versus 1.2, negative 1.2. So negative 1.2 expected, actual is negative 12.3, the prior is negative 3.3. GFK consumer confidence this evening is the highlight, along with the inflation. You'll see them in bold there on the calendar. But there's a lot going on here today, or a little bit going on today. ECB's Lagarde's speech is set for 10:15. Not sure why. The press conference is going on right now, but that's what we have. In the S&P, we have 217,000 contracts traded. 32% of the inventory is short. 32% of the inventory is short, and the range is quite tight at 33.75. I had just commented a minute ago in the Convergent Trading head trader chat that I'm actually surprised coming in this morning to find that the range, the overnight range, is inside of yesterday's range. There was a very clear, very clear ledge overnight yesterday, and the expectation is it would likely push higher. And to answer the pop quiz, the reason I have to state that disclaimer is because of regulatory requirements. The CFTC requires that when you talk about futures, because they're leveraged and because you can lose more than the value of your account, it requires me to state that derivatives trading is not suitable for all investors. That's why it's there. It's not because I don't want to get sued. It's not because I'm scared. It's not because of all this stuff that you guys wrote. Some of you wrote a lot of very a lot of curmudgeons in the crowd, but it's required because I'm a registered broker. I'm the owner of EdgeClear, which is a registered brokerage, and it's required to state that when speaking to the public, and it's true. Derivatives are not suitable for all investors, right? So just to provoke you guys, I figured I'd ask that question, and you responded with a lot of fun back and forth here. Let's focus on the S&P. The S&P range has extended up just now to 39.79. Yesterday's high being 39.77 and a quarter. So we did ultimately poke through. Let's take a look at what we did yesterday. Well, here's what was expected yesterday. This is what was expected yesterday. That was scenario 2. Here is scenario 1. Scenario 1, we had pulled back. We were opening below mid, below the full session VWAP. And we had 39.37 as a key over under. You could see here a clear neckline in the LVN. And the expectation is we would push up, battle into this 41.43 area and fall off. And I expected a bit of a reversal yesterday into 39.09 and 3900. That's what was expected yesterday given the action. And then we had a second scenario. The secondary scenario is that it likely pull back a little bit, so 39.30. If not, then it might poke the 39.22. That was the week high from a couple weeks ago, weekly high from a couple weeks ago, 39.22, and then expected it to rotate back up into the 39.69 area above. So that's the secondary scenario. What actually happened was this. Yesterday, we opened up right here, and we turned down. We turned down immediately, and we pushed to higher than the expected amount, the expected area. We turned at 39.2475. So we could not retest that 22.25 area, which was the overnight low. We pushed just a little bit into the single prints, that shaded area you see in front of you there. We pushed down, and then we started to go higher. Those of you who are in conversion trading, I talked about looking for the push into the that 43, and man, my brain is not working right today. 33, and then looking for the push higher into the 70s. The trade yesterday that performed really well. Where is it? It's right down here. I posted an image of it. Let me see if I can find it. This is what I posted in the chat on the long trade. Really the only trade that worked well yesterday. I'm going to find it for you and post it. You would think I'd be prepared, but I'm not, because that's just how I roll. There is an image in here that I want to post, and I cannot find it. Just scrolling back through the chat. And then once that happened, so this is an image that I posted. There it is. So there's that 39.22. That's where the 39.22 came from. That's where the overnight low came from. But there was another image. Oh, here it is. This is the trade setup right here. So there it is. We had an impulse up from the low, 24.75. We had an impulse up through the mid, through VWAP. There's the mid is the blue line. The VWAP is RTH is solid. Full session is dashed. VWAP, we had this was the largest impulse since this morning, and then looked for a pullback to 32.50, and it traded 32.50 on the nose, and then was looking for it to break that 43 quarter I talked about earlier, and then the target is 50. Now remember, 39.50 is a major swing high. It is like the high of the prior month or something like that. I don't recall. Let me check that, make sure I'm not throwing you off. The monthly high, no, it's not. So major high at 39.50, and we took the 39.50 overnight, but we didn't take it during the day session. So the idea is to hold on to the 32.50 into the 50. Once we break the 50, we would go into a gap zone, and that gap zone runs all the way up to 40.16. So if it breaks the 50, pulls back and consolidates to hold that 50, then you're looking at another opportunity to get long into the 64. That was 64, 69 that was discussed earlier. Let's go back to what the market actually did. So that was the trade here. Where was it? Right in here. Whoa. No, it's right in here. 32.50. That was the long. 32.50 busts through, and then we put in an IB, and then we have a secondary impulse. So continue to look for longs. Target the overnight high. After that. And then from there, it is really a free reign to the decade or the 10 handle. So 39.70 becomes important, 39.80, 39.90, 4,000, 40.10, and 40.16. And you could see that it's stalled out at the 39.79 there ahead of the 80. Or the 39.75 ahead of the 80 before falling back through. This was the Google News right here, back to the IB for a little shot, and then from there it was kind of noisy. So that's the recap of yesterday. Sorry it wasn't as clear as I had imagined it in my head, but here's what we've done. We've really pushed through some key levels. We pushed the 39.50 from a couple weeks ago. We held the 39.22 in the overnight session. This was very bullish. Okay, this was very bullish. And we continue, and here we are today. We're trading at 39.60. We just pushed the 79 to pull back. Quite bullish action. And as I wrote last night, my notes in the Head Trader channel, I wrote, la, 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 la. We pushed into the 39.60 to 40.16 gap today and held it on the close. Pay attention to the key over under. Stock zone below it is likely to continue higher from here. The key over under is 39.22. We're in a range where poor structure exists, and we're likely to test the extreme of the structure, which is 40.16. 40.16 before we find those sellers. In other words, if you're in a big gap zone, so if we pull back this TPO chart, so here we have a day right here, which we took out yesterday. We poked through that high yesterday, and we ended up pushing above, putting in a high of 77 and a quarter yesterday. 77 and a quarter is in this gap zone. Okay. And if that's the case, we're really looking, there's some action right here. There's no reason for sellers to sell if you're sitting here in a gap zone. So to me, this is very likely to float up. See, this is the low we're looking for. So right up here, the 39.60 or so into the 40.16 is where we're at. So we are currently trading the 39.60, and we're in this gap zone. There's no structure here. You can see on the profile, there's very little in this area. To me, this is, if you're someone who's looking to sell, why would you sell in this area? And that's the question. So if we look below us, however, we can see there are a lot of single prints and poor structure down below us. So when we turn down, we can see very clear areas that we would test. Again, 39.09 pushing us to the 56, if you recall, pushing us to the 38.20 or so, to the 37.75. Those are acceptance areas. And then above us, there really is not much until we reach that all magnificent balance that we had back in May. If you recall, May was just the end of May through early June was this huge, gigantic balance zone right here, shown on this profile right here, and that brings us back to 41.20. So to me, as long as we're holding this gap zone here, we are likely to continue to push higher into that 40.16. That's what it looks like. Now, all of that can end in a moment's notice, based on news, right? So it's key to remember that. So let's take a look at what's expected for today. Today, let's zoom in a little bit. Let's move this down. The next resistance, again, key resistance, 40.16 up here. 40.16 is our next key resistance. That fills the gap. The gray area is a gap zone, as marked right here. It was partially filled yesterday, and we are trading below it. So the expectation this morning is to continue to try to push through. I'm expecting it to make an attempt at that into the gap again, but I'm looking for to show some weakness and consolidate somewhat through today's session. We have run quite a ways here. We are in a gap area. I'm not expecting it to sell off, but it may rest because we have not created good balance to continue to push, So this morning, I'm looking for the overnight high to be taken and for it to kind of go sideways. That's the primary scenario. If it's not able to hold that, let me change colors here because this is confusing with the same colors. If we're not able to hold that, we're likely to push higher, find our sellers against yesterday's point of control. Yesterday's point of control is at 39.68. So 39.68 over here. Find some sellers and then push through. Use the overnight, the full session VWAP mid at 30.62.60 as a pullback area for a short, looking for a break lower and a return into this point of control that was put in a few days ago down in the 30s. So this will be 32, I believe. So that's the secondary scenario. In either case, today, it's really important to kind of bring in or fold in the expectations. You'll notice yesterday's range is smaller than the prior day. You'll notice that the overnight range is quite tight. It's, 79 to 45, so 34 points, a little under 34 points. I wouldn't expect too much from today's session. It's likely to be pretty choppy up here. And given the fact that we are in this kind of blank structure area, you're likely to see both sides battling it out. So let the first 15 to 20 minutes. I'll tell you, yesterday I took a trade long into that 43 and lost money. It seems like for the last 3 days, I take a trade right after the open and I'm hitting a full stop. It's just not learning my lesson. I need to let the market set up. The better trades come a little bit later, and that's what I would recommend you do. Okay. 3960 still important. 3960 is that the beginning of the gap zone, um, the original gap zone. And so this is a kind of an over under, a temporary over under area. Let's see what it does this morning before jumping in. I want to remind you that today at 1 o'clock, I'm going to be doing a webcast, a live webcast about R factors. This is the most overlooked metric in trading. I'll go through some examples of how R factors impact the outcome, regardless of where your entry is or targets or whatever. I think you should watch this. I think this may have a big impact, big positive impact on your thinking in terms of how you structure and what trades to take. When should I wait? When should I trade? The R factor is the big filter for when a trade makes sense and when you're just kind of randomly or FOMO trading. You can join us by going to ct.pro/r-factor lowercase. It is also pinned to the top of your live chat. This will be at 1 o'clock today. It'll be during the trading session. I'll catch you in there. Take care.